Hi, everybody. I'm Mary Meyer, the host of Healthy, Happy, Wise, and Wealthy, and this is podcast 2. And as I am just starting. I'm doing the whole example of let's start a podcast and figure it out as we go. And I'm only doing that because of Erica. Otherwise, it's a really bad idea. But for this one, it works. So today I'm so excited because I did ask 3 people, wonderful ladies that I know in Reno, Nevada, to help me discuss everything that you would need to know when you're buying your first home, including how to find a home, can I afford a home, and all of you touch on, can I afford a home, honestly. So Angie Salcido is the owner of Premier Credit Solutions. Angela Kluck is a realtor with many years in that, and Jill Blessing-Bonnet is a mortgage lender. So I do have a little history with real estate because when I was in Atlanta, before I came to Reno, I was a realtor and of course got my real estate license in December of 2019, right before everything crashed. So that might really be a good place, not crashed, COVID. It felt like a crash. Prices went up. The ability to sell a property went down because no one had anything on the market. So that's what I guess I meant by that in terms of being a realtor. But these industries are super challenging in my opinion. I think I've heard a lot of stuff about how, it's easy to be a realtor or a mortgage lender. And I don't think people understand credit repair to know what to say about that. So I don't think it is. I think they're very difficult industries to be in. And when you use any of these ladies, you better be nice to them, whether it's these or anyone else in any state, because this is not easy stuff. So if we could start, I just like you guys to kind of go and introduce yourselves and say what you do in summary a little bit, how long you've been doing it. So Angie, you're at the top of the screen. I'll have you start with credit repair.
Well, hello there. I'm Angie with Premier Credit Solutions, and I've been in the business for about 14 years repairing credit. And I've helped over probably about 2,500 people in Reno achieve homeownership.
That's amazing. And you are national. You can work with anyone nationally also?
I can, yes. Yeah.
Yeah. Okay. Awesome. Jill, introduce yourself for us.
I'm Jill Blessing-Bonnet. I work with Gateway Mortgage. I have been in the mortgage business for about 30 years. I like to say that I've seen the good, the bad, and the ugly, because it is somewhat of a roller coaster ride, this industry. But it's very rewarding, and I love what I do. I love helping putting people in homes.
Yeah. And so where is are you just in Reno, or you can also?
My office is in Reno, yes, but we can lend in 42 states.
Amazing. Okay. So pretty much almost nationally.
Mm-hmm.
Jill. Angela.
Hello. I'm Angela Kluck. I'm with Remax Professionals here in Reno, Nevada, but my license allows me to cover the whole state of Nevada, but I specialize in Northern Nevada. I've been in the industry off and on for the last 17 years. I was just adding that up the other day. I've been in the back end doing transaction coordinatings for big teams. I've been a solo agent. I've been on teams, big teams, and now I'm back as a solo agent, and I'm happy, and I'm helping people with buying and selling homes, and that's what I love to do.
Amazing. Well, I'm going to keep you on for a second. So when you have a client who's maybe they're a young couple, and they want to buy a home, what's your initial, give me just a few top tips that you give them?
So a majority of my clients that come in are online leads. And so initially I get them, they want to look at houses right away. And so it's kind of the back way to do things, but I honor that because I know that's where people start. That's what they want. They want the shiny object. So we go out and we look at homes and I show them 1 or 2, and then we delve into some questions, financing, what's your goals with buying, and we just get into that whole gamut. And then I start switching them over to a great lender like Jill here, and we start going through their finances. What can they afford? And then if they need a little bit of credit repair, a little bit of help, then that's where Angie comes in. So this is a whole team that's geared to help, especially first-time home buyers, navigate buying a first-time home.
Yeah. So Jill, tell us, when you have a first-time home buyer, what are some of the things that you would let them know about? What would you do?
Well, what I do is I usually it starts out with a phone call. I really like to get them in the office or do some kind of Zoom where we can be face to face. I can show them some numbers. They get to know me. I get to know them. It's really important for me to, when I talk to them, I want to know like what their financial goals are. You know, it's not just necessarily about buying a house, but what are their long-term goals? You know, how long do they think they're going to be in the house? What kind of payments do they feel comfortable with? I obviously have to talk about their credit. And a lot of times that can be a hard stop if their credit score, you know, isn't where it needs to be, which is where Angie would come in. So we go over a whole gamut of things before they even start looking, preferably, just because I want to make sure that we're all on the same page and that they feel comfortable with everything. Because that's really the bottom line, is that they have to feel comfortable regardless of what I say they qualify for. They're the ones that have to make the payment every month, and they have to feel comfortable with that.
Yeah, for sure. So Angie, you get a young couple and there's some credit issues, like maybe what would you do? What's your first steps? And it might not be a young couple, let's be honest. You know, plenty of people in their 40s and maybe even older are still trying to buy their first house. So it might not even be young, but yeah.
Yeah. So what I do is I get them on the phone, get them scheduled for a credit consultation. I'll pull a soft pull credit report just to kind of see where they're at with things and what needs to be worked on, and then come up with a game plan if they need to remove inquiries or late payments or anything like that. Also like pay down credit card debt, just, you know, A, B, C, D, what we can do to get the scores up as fast as possible.
Yeah. So how does that work with you? Like they have an initial consultation with you and then kind of, and you see there's some things to do. What's the next step?
Next step is get them signed up with me so that we can work on any collections or inquiries or late payments they may have on their credit report. And then their homework will be to pay down their credit cards down to 30%, which is 30% of the revolving limit. So say, I'll give you an example. So say there's a $500 credit card limit and they're maxed out. Usually that will decrease the credit scores anywhere from 50 to 80 points. So I advise them to pay it down to 30%. So that it's not affecting the credit scores, and that will be kind of their homework. And if they need to establish credit, we can have like the husband or wife, like if it's a husband and wife and one of them has stronger credit scores, we'll have the husband add his wife to the credit card as an authorized user. There's so many different scenarios that happen in my office where it's just, you know, looking at different things to raise the credit scores as soon as possible. But that's where the initial consultation is, where it's just, yeah, this is what we need to do. You know, make sure the balances are below 30% and, you know, keep it there. And then we'll go in and start removing collections, late payments, and inquiries.
Yeah. And that's so great. And I know you guys, you know, I've seen you, of course, you know, different, you're a favorite among realtors and mortgage lenders because it's like, you're kind of the avenue to make it happen for everyone. And I think most people don't even know that is a thing you can do to repair your credit. I don't feel like that's as much of public knowledge as maybe it ought to be. So it's a very good service, and anyone in the U.S. can use you. So there you go. Get that credit repaired. Jill, so if someone comes to you and their credit's good, the money's good, maybe they don't have a down payment, enough money for that. Like what are some, I know that's kind of a super challenging thing. It's like, I want to buy a house, but I don't have money for a down payment. So what would you say to that?
Well, there's lots of options that people, even if they don't have money in the bank, there's other things they can do. There are down payment assistance programs. Here in Nevada, we've got some great down payment assistance programs where they can get money for down payment and closing costs. They
Are
would
those
have to have,
statewide, or those federal?
these are state programs here in Nevada that I'm talking about.
Okay.
They do have to have some of their own money though, and I tell people that because you're going to have some money once you make an offer on a home. The realtor is going to want an earnest money deposit, and that money is used to open escrow. That could be $1,000, and so they do have to have that money. And then a lot of times we have to collect for the appraisal. That's paid, and that's another $500 to $600. So they do have to have some of their own fund money just to kind of get the ball rolling, because they wouldn't get the down payment assistance funds until the end, till the closing.
Right.
Can
Can you, just in case someone doesn't know what an appraisal is, can you explain what that is and how that?
Sure.
Yeah.
An appraisal is required on most loans, and that is a way that we, as the lender, we want to just make sure the value, what they're paying for the house, it's worth that. So the appraiser is going to go out, they're going to find comparable sales for like properties that have sold preferably in the last 6 months, and justify that the purchase price is supporting the value so that they're not overpaying, or if they're underpaying, that's a different story. But basically just to justify the value of the property.
Yeah, and it feels like that's also a little bit of protection for the consumer, because if they put in an offer for $400,000 on something, but other properties maybe only sold for $350 or $375, there's that would be where it would be like you have to come up with a reason why it's actually worth that extra money. But Angela, what do you have to add to that in terms of like appraisals and getting that?
Yeah, so from my end, what we see with appraisals is that reopens negotiations during the terms of the contract. Now we know the lender's only going to lend on what the appraised value is. If there's a gap, there's in certain markets, the seller can say, I want the price that you offered. So they're asking the buyer to come in with that difference. And not a lot of buyers have that. So that could kill a deal. The seller says, okay, this is what it appraised at. Sometimes they can contest that and say, here's the comps that we show supporting that value. And so sometimes the appraisers will look at that and sometimes they don't. But we try for our clients. And then that's the time when, if both parties cannot agree, then we part and we go our separate ways.
Yeah, so we might be skipping ahead a little bit. I know, but we jumped into appraisal, so I asked about that. So I think but that's like critical. So like there's this whole process, right? If your credit's not good, you need to fix the credit, and then hypothetically the next step. Normally you're looking for properties and talking to a realtor first, but the next step is probably to find the mortgage lender and to make sure that you're really understanding if you have can't go above a $2,000 a month budget, for example, that all the different things in that is only going to add up to $2,000 a month. And then you talk to a realtor who's like, okay, for that amount of money, we have to look in this price point, and then you kind of go from there. But Jill, could you kind of talk to them about what might be some things in terms of like when they have their monthly payment, and just maybe talk a little bit about like the other things. It's not just the mortgage.
Like what's included? Yeah. And I wanted to touch back a little bit about down payment. They can also use 401k funds if they have a 401k, and gift money if they have a relative, a family member that's willing to give them money for a down payment. That can be used as well. So there are some other things we can accept besides the down payment assistance programs. With regards to the mortgage payment, in a mortgage, we as the lender are looking at the property taxes, homeowner's insurance, like for fire or flood, and then mortgage insurance. And when I'm pre-approving people, I'm estimating those three things because the property taxes and the homeowner's insurance is tied to the property. Basically, it's going to depend on the property.
Right.
But what we do is we take, when the mortgage payment's made, the taxes and the insurance are included in that payment, and then we take the taxes and the insurance and we put it in what's called an impound account. And then the taxes are paid and the insurance is paid for the borrower. And lenders prefer that because then they know those things are getting paid and they're being taken care of. You know, if someone doesn't keep the insurance up on the house and the house burns down, well, then that's the lender's collateral for the loan, right? If the property taxes aren't paid, the county can then foreclose on the property and the lender's out of luck then. So they prefer to have those things impounded because then they know that they're getting taken care of and getting paid on time.
So I don't know if people might not understand the word impounded. That doesn't mean they pay a bunch of tax up front necessarily.
Well, yeah, we do in escrow. We do have to collect a few months of taxes and insurance when we close escrow, because we haven't been collecting from them all year.
Right.
We have to make sure we have enough in that impound account when we close escrow to pay that next installment of taxes, let's say.
So is it usually just like a year? Like they don't have to pay like, I just want to, I've, bought and sold homes, and I know you guys have, and you're in this business. So it's like, I want to kind of make sure it's so broken down for people that just have no idea. I remember trying to explain this to my teenagers way before, and they could not even, they're like,
it's like a foreign language.
And they're smart, and they're like, I think they just looked at me like I was crazy.
No, it is.
But I'm like, you guys have to understand this. They did not. I mean, no. So, but yeah. So there's like, there's the property taxes, which are you can find out what the property tax is. If it's in a homeowners association, which most are, then you can find out how much the monthly fees are, and that's just some kind of part of your planning. And then when you go to closing, it's going to be probably a few months or that year or something like that. You pay ahead of time for your closing costs.
So usually your homeowner's insurance, you pay a year in advance, and then we're collecting every month, right? And then next year we would pay it because we've got enough in the impound account, of escrow account, to pay it. As far as the taxes go, now that in Nevada, the taxes are paid quarterly. Every state's a little different. Some states you pay them twice a year. So depending on when the next installment is due, that is how we determine how many months we need to collect. But it could be like 3 months of taxes. It's not going to be, they're not going to be paying years in advance or anything like that. So it's just enough to make sure that when that next installment comes due, there's enough to pay them.
Yeah. So like it's just included in your monthly payment then. For the next, when I lived in Georgia and in Tennessee, and I think in Wisconsin, which is the places I've owned homes, I think it's annual.
Oh, okay. Yeah.
So I don't think I even knew that, but Angie, back to you. So like, let's say they are like, okay, they're in college, right? Or whatever. I don't know. They're young. What can you do? What can you do to build credit from the start?
So it's kind of risky if we do an authorized user, but I'll give you a scenario for my son. He was only 16 and I put him as an authorized user on my credit cards so that he could build some credit. And then essentially when he turns 18, we're going to start some credit cards, but he already has established credit history because he was piggybacking off of my 2 credit cards. So it gave him about a 10-year history because I put him on 2 credit cards. And now we can probably get him into a lower interest rate credit card because he already has established credit. Now, if they don't have a parent that can, add them, then what they can do is start a secured card. And I have one on my website. And you put $200 down, and it's a 19.9 interest rate, and then it reports to the credit after 3 weeks. So it's not score driven, but that's just a easy way to start building credit.
Mm-hmm. And there's people out there, of course, who say do all cash and never use credit, which can be a thing. But why do we need credit?
You guys can all chime in on this too. Well, so we have a report card when we're in high school and college. So like we get grades, right? That's pretty much our our history for as adults. That's like our report card. Credit is our report card. That's what I explain to my high school kids when I'm teaching to them. I'm like, you are still going to get a report card. This is your report card. And it's tracking all of your payment history. It's tracking the years that you've had credit, all that stuff. So if you don't have anything on the credit report and you're showing like a 0, then you don't exist in our world. And it's you can't rent an apartment, you can't get a car, you can't get college funds, all that stuff. So you have to exist on the FICO score. So
Isn't that crazy?
yeah.
Jill, is there a certain amount of time with mortgages they need to have a history of credit before you can give a mortgage?
Not really. In fact, I recently had somebody who had he had only just like a couple years, and he had been told by another lender that was a problem. And I said, I don't think so. And so I ran it and I got it into underwriting and we got him approved. So usually as long as there's a score, because everything's real automated as far as underwriting goes, which is underwriting is the loan approval person. And the system that we use is automated. Everything's very credit score driven. So as long as there's a credit score, that we should be fine. There usually isn't a necessary length of time.
Yeah, that's very helpful.
Unless it's derogatory credit. Then we have, bankruptcies and stuff. Then there has to be a certain length of time that as far as how old they are.
How old a bankruptcy is?
Mm-hmm. Yeah.
How old does a bankruptcy need to be usually?
Depending on the loan type. So government loans, it's 2 years from discharge, and then conventional loans is 4 years.
Okay. So 2 years to 4 years. So Angie, anything to add to that? If someone has a bankruptcy, is there a way that you can speed it up to get it off their record, or they just kind of have to wait it out?
So I've worked with a lot of bankruptcies. I have a lot of attorneys that work with me. So once they file the bankruptcy, can I kind of elaborate like what the attorneys do on my end? So they just basically file the bankruptcy, and sometimes they will list the accounts individually on the credit report included in the bankruptcy. Well, that's not how it's supposed to appear on the credit. It's supposed to be attached to the public records, which would be bankruptcy. And then the account should be completely attached. So each account that was filed in the bankruptcy is a good, probably about 10 to 20 points, depending on the year. But if they're individually on the credit report as included in the bankruptcy, it can hurt their credit score. So I can go in and remove that stuff. And a lot of attorneys file the bankruptcy and they're like, here you go, Angie, fix this. Because that's not a part of what they do. They don't work on the credit side. So that's why I work with a lot of local attorneys here in town.
So you remove different accounts from the bankruptcy, is that what you said? And then
yeah, so it's listed on the credit report as included in the bankruptcy.
I see.
Legally, they should all be attached to the bankruptcy, which is a public record. And that's a good about 30 points on their credit score.
Wow.
Okay.
And a lot of times my bankruptcy attorneys will refer me clients because they don't have enough debt to file bankruptcy. So it's usually about, I would say, $10,000 to $20,000 in debt. But some people will go in and say, oh my gosh, I'm so overwhelmed. There's so much stuff reporting on the credit that I don't know what to do. And, it'll be a couple accounts. And I'm like, I can help with that. I can help settling on those debts to where it's off of your credit report and you're not having that 7 to 10 year bankruptcy on your credit.
Yeah, that's great to know. So if you're overwhelmed, you can call you to help with credit cards.
Yeah, I would love to take a look at anybody's credit. I mean, anybody can use help.
Yeah, for sure. All right, let's circle back to Angela and we'll just shift a little bit. So you have someone that comes to you and they're like, we think we can afford $500,000 house. Can you show us some houses? So you might, at that point, you kind of did answer, like you would go and you would show them a few houses and then you would look at numbers. So then they come back. Okay, I'm going to give you a scenario. So they come back. They've been looking online at houses that are 500,000, which is a reasonable amount. It seems like nowadays. It used to be so much, but not anymore. And then it comes back that they can do close, but only 425. So they had their heart set on an area, and there's nothing in that area that's at 425. So like, what do you say to them? What do you do?
Yeah, I had a shopper like that a couple years ago, a young couple. They were techies and they worked from home, and they loved the whole idea of a big acre lot that their dogs could roam on. And we were looked at a house in the 500 range, and then we talked to their lender, and their lender said, well, this is what you qualify for, 425, and that was their max. And they said, no, we really want our payment to be X. So that even shrunk it down a little bit more. And so there were some properties that we looked at, but it happened to be a time when we were seeing multiple offers and just kept getting bid out. And they decided that was too overwhelming for them. And they took a back seat and waited a little bit. But that's what happens too.
Well, let's say in a scenario, though, they do want to move forward. I mean, like, what kind of other things might you look at? Like, I mean, do you try to talk them into something that they can fix, like a fixer-upper or a different part of the city, or the idea of this is just your first home, it doesn't have to be your life? What kind of conversations might they? What kind of things might they consider if they can't get into the house they actually really want to get into?
So there's a couple things that we can look at. I am great at looking at, I have the ability to say they want a 4-bedroom. Okay, well, how about if we see this 3-bedroom plus a den? Maybe that works for their scenario. So I'm good at thinking outside the box and finding something that they didn't think would fit. And then they end up loving it. So we can do things like that. And right now, what we're seeing in our market is maybe a buyer says, I only want to go up to 400, but I always look just a little bit over 410, because maybe that's getting a good deal if it's been sitting on the market for a little bit. Maybe it's getting some credit back from the seller so that we can pay for some closing costs, or pay down the interest rate, which Jill can speak on too. But those are little things that we see and that I'm helping with buyers right now.
Yeah, thank you for that. And I know you guys have all bought and sold homes, so like, kind of, I know for me, like one of the things that I like to do when I've either helped people buy a home, and it was the tougher market where there wasn't a lot on the market. One thing I did for a client once is there was a property they liked that was not on the market. It had been listed and is kind of like off market for a little bit. So I called them, and they were just trying to make some repairs to make it prettier. And so and then I've done the same thing with myself, where like the property's been on the market for a really long time. I get excited about that. For me, I get excited if it's been on the market for a long time, because maybe they're hard to work with, but maybe also they're ready to lower the price, and you can get in there. And if it's off the market, but they're just making some repairs, maybe you can get the deal when no one else is there. Or maybe it's just horrendously painted, or has some just topical things. If people can look past that, I do feel like that's something where they can maybe get the deal. But Angela, what do you think on that, or anybody else?
Yeah, absolutely. I've sold. I've helped buyers look for homes that weren't on the market, like for sale by owners. That's a great little niche that people don't think about. And as long as the for sale by owner is willing to work with the realtor on the buy end, they don't want to be represented, but I can represent the buyer and still make things work. So things like that. I'm always, if I see a house that's is in contract, but maybe they're still allowing showings, I'm calling them up and I'm asking, how's that escrow looking? Is there a chance for us to be, put in a backup offer? All those little things can help a buyer get in where they normally, wouldn't.
Yeah. Have you noticed, do you have people who are like, show me the one that's a little more run down so I can get a deal so I can fix it. Does anyone come to you saying that? Or is that, from what I hear, everyone wants to kind of turnkey, but is there ever anyone who is like, I'll take the deal?
There's always investors out there looking. They reach out constantly all day. I get text messages from investors that want that, they're looking for that off market or something coming up soon, property that they can, get a good deal on, fix it up, and then put it back on the market.
I feel like it's almost a thing of the past, but I just feel like that's something that I wish first-time home buyers would think about, especially if they know anyone who's handy or can find someone, because it's like you can get into a home that needs some work done on it and then do the work.
Yes.
And I just feel, does that feel like to you guys like a thing of the past too? Like,
I don't really hear that very often, but I do want to mention there are rehab loans that people can do if they do want to buy a fixer-upper.
Okay, tell us about that.
There are first-time home buyer. FHA has them. Conventional loans have them, where they could put with FHA. They can put as little as 3.5% down. They can get the cost for the repairs financed into the loan.
Okay.
They would have to have a good cost breakdown, know what they want to do, know what kind of materials. Like, let's say they want to redo the kitchen. They'd have to know like what kind of countertops, what kind of appliances, stuff like that. Have to have a breakdown, have to have a contractor, because the appraiser will go and give it a future value with all those repairs or improvements being done. So the appraiser needs to know, what kind of quality materials are being used.
Right.
But that's a great program. And back in 08, 09, when there was a lot of foreclosures and things like that, those loans were actually a lot more prevalent, because a lot of people were taking the cabinets with them when their home got foreclosed, or taking out the plumbing.
Is it like the 2008, the crash, kind of when that was going on? Isn't that, man, it's been a wild ride these last, many years, right?
Yeah. But those loans were more prevalent back then, and we do offer them now. And it's a great program. I honestly don't know why more people don't take advantage of it.
Maybe they don't know about it. So FHA, Federal Housing Authority, is that right?
Yeah, Federal Housing Administration. Yeah.
Administration. Okay. And then I think you have mortgage. They have explained that to them. The FHA versus conventional. Let's do that.
Okay, so FHA is basically the government's backing the loan. They're insuring the loan for the lender. Okay, same with like VA. That would be veterans. Veteran VA has a rehab loan as well. So basically, the government agency is insuring the loan for the lender, that if the borrower doesn't make the payments and the lender has to foreclose, FHA would come in, pay off the lender. They would foreclose on the house and sell the house. So it really helps alleviate the lender's risk. For the loan. FHA is a more lenient when it comes to credit scores, debt to income ratios, things like that. They do require mortgage insurance, which again is an insurance for the lender, but the cost goes to the borrower. That's included in their monthly payment. But it's a way to help people get into homes that maybe don't have that A+ credit, or maybe they're pushing their debt to income ratios a little bit higher. FHA will allow for those types of situations.
Yeah, that's good to know. And lots of different situations. So like, honestly, like when I divorced, and my credit was great, but like all the stuff, it had to be an FHA loan, which made me crazy, or I had to wait a year. And it's just like, so life change can cause those issues too. So, okay. So people need to know you're going to pay whatever the mortgage is, and then you're going to pay an HOA fee monthly, and then you're going to pay property tax insurance monthly, which usually the mortgage lender or the company, not the lender yourself, but the company will collect that and then pay for you when it's time. And then you will have also, is it called PMI?
That mortgage insurance. Yep. Yep.
What does that stand for?
Well, PMI would be private mortgage insurance, and that would be with a conventional loan.
Okay.
FHA, it's just mortgage insurance. Yeah.
Okay. And so then they'd have a fee for that. And what is that? Maybe $200 a month, $150?
It's based on the loan amount. It's based on the loan amount, how much they're borrowing. And it's a little complicated in that there is an upfront mortgage insurance fee that they pay, which usually gets financed into the loan, and then they pay it monthly. So it's just a percentage of the loan amount, basically.
Yeah. So there's all these things we don't, I mean, there's electric bills and the repairs are on you. Like if you've been running for a while and now you own, now if there's a roof repair, you get to do it.
Right.
So having property insurance too. Those things. Sometimes is that usually required too, is property insurance?
Right, yeah. So the HOA dues, like if you're buying a condo or a planned unit development and you've got HOA dues, those are paid separately. Your homeowner's insurance would be included in the mortgage. So insurance for fire or for flood.
I feel like in Georgia because I had an HOA, I feel like it was rolled in. I think it was, but it's interesting. Maybe different states do it different ways, but
yeah, maybe.
All right, everyone jump in on this question because we're all women with opinions. Do you buy in an HOA community or not? What do you think? Angela, we'll start with you.
Yes. Sometimes those are starter homes. They're more affordable, even though they have those HOAs, and you have to really look at those amounts so they don't throw off a buyer's budget. But those are great places to start. My daughter, she's 33. That's where we started her. She got into a townhouse. She was there a few years, and then we traded her up into a single family home. And now she's a homeowner and she's 33 and she's doing it all on her own. Yeah.
Anyone else have an opinion on it? HOA
I live in a property that has HOA dues. Ours is really more of like a landscape maintenance. So they take care of the common areas, that kind of stuff. They're not real strict. They don't enforce like parking, and things like that. But I think I like them personally.
Yeah. Angie, any opinion from you?
Yeah. So my first house was in Sparks, no HOA. So I think the HOAs really protect your property, like the value. It increases the value because I went from, not having an HOA to where people around me would not take care of their yards and stuff. So that kind of like decreases the value. And then, people don't want to live in a bad area. So when I bought my second house, I have an HOA and they really maintain all of the yard work, all that stuff. And it looks so clean and pretty. So I really think it increases the value because when people are looking in the surrounding area, they want to see that it's clean and neat and their property value is going to go up. So I really like being in HOA, and it's a set amount. So, but that's what I like versus not having an HOA because my rental was not HOA and my neighbor didn't keep up their yard, and some neighbors did and some neighbors didn't. But in an HOA, you have to keep up like the weeds and stuff like that. We are notorious for having weeds in Nevada, so even though it's a dry state, but when it gets sunny, all those lovely weeds come out.
Yeah, for sure. Well, yeah. So I've had different opinions on this too, because and I've owned places in different states, but when I bought in Georgia, that was the first time I had bought into a townhouse community. So I feel like everyone, like if you're brand new at buying, the thing to know is like you have to really actually ask for the HOA, all the covenant and restrictions. So that's what you ask for, the covenant and restrictions, and your realtor will know this stuff. But you look at it and see what's being paid for and what isn't. So you might have a pool, you might have a gate. They might do the landscaping, they might not do the landscaping. So then you roll it in. So for the townhouse community, it was the most expensive. I think I'd lived in one that was only like in Wisconsin, maybe $25 a month, and they didn't really do anything except for maybe send out notices if someone had too many weeds, right? If their lawn was too long, their grass was too long, then they got a notice. But then the one in Atlanta, which was an which is a townhouse community, that covered exterior paint, gutters, roof, the streets, because the street repair. So if they had to make repairs in the streets, it covered the lights, covered the gate, it covered the pool, the tennis courts, and the playground, right? So that was $400 a month. And so I think people look at that. And then, of course, in Atlanta, too, there's a lot of high rises where people are buying condos, and those can be up to $800 a month. But single family homes, it depends on if there's not a pool, then it might just be $25 a month, So I think that's good to know, too, is there are a lot of different levels and what that entails. The most is going to be a condo. And these aren't really, I don't think, a thing in Reno, but they were definitely a thing in Atlanta. So, and those can be tricky because it can go up exponentially if not enough people have bought. So those can be a little bit scary too. But like with the townhouse, when people were saying that's way too much for a townhouse, I'm like, but I paid that on a single property if I had to repair my own roof, and do my own painting, and that kind of thing. So Angela.
I just wanted to touch on something that you just brought up is the covenant and restrictions, the CC&Rs. The way that a planned development or HOA maintains or the health of their, how they maintain the funds is very important. And they have to do reports on that every couple of years. And so when you get a copy of those, it's hundreds of pages and most people don't read it, but you should look at the financials in there that say how much reserves that community has, because that's very important. If they don't have the reserves to maintain the outside of the structures, it's of a condo unit or the roofs, then you could be looking at an HOA hike, which we've just seen in the last couple of years. HOAs for condo and townhouses nationally, but also here locally, they went up double, if not triple in some places. And so they just had to keep that reserve so that they could do those items that the HOA takes care of. So most people don't look at that. They don't know to look at it, but that's very important, is the health of the HOA.
So do they do special assessments for that kind of stuff in Nevada? Because I know it's called like they got to do this one big project and redig the gutters or something. I don't know. And so if there's a special assessment, is there something like that in Reno too, or no, or Nevada?
So yeah, sometimes there's special assessments that they'll add on. A lot of times they'll say, we're going to increase the HOA by X amount to cover this, or it's just going to be for 5 years, that X amount is going to go up just for 5 years to cover this project. So different things like that. And you they can, if they're going to sell within that time frame, they can choose to pay that assessment off at a closing or pass that on to the next buyer.
Yeah. So a lot of stuff to consider for sure in all of this. Angie, let's go back to you. So what would you have a son who's, how old is he, 16?
He's going to be 18 this month. He's turning 18 on the 21st.
So and you guys all have kids. So like for your kids, you're like, when should they buy? Like, when is a good time to consider purchasing? Like do the mom angle for me.
Well, I look at, Jill's perspective would be, try to get them prepared as soon as possible because, once they get into the market, they're constantly building equity for themselves. But they do have to have some time frame on the job, make sure they have at least 2 years history and got some saved up, a bank account, all that stuff. I just went through all this with my son, got him set up with a bank account, made sure he's getting direct deposit, just so that it's just so much smoother for Jill to do her job and track everything and make sure that they, are having all their income go into their accounts and stuff like that. And they can do student accounts, which, their parents can co-sign for, which I did for my son. And then just made sure he had Social Security, his, just preparing him for life.
And you just got a car. Yeah.
Yeah.
So you just said the word equity. So equity is something that is, explain, Angie, I'll let you do since you're doing this. What is equity and why does it matter? Why do we buy versus rent? Like why would you?
So if we're renting, everybody's renting, and where's that money going?
Not to you.
Not going to you. It's either paying, the rental companies, if you're paying for an apartment, but if you are just basically paying somebody, you're not building equity in anything. You're just basically throwing your money away. I know everybody's got to start somewhere, but if you were able to build equity in a house and you're making those mortgage payments on time, each year that property value is going to go up. And Angela will attest to this. Reno's growing. A lot of my clients should have got into the market a long time ago, but they didn't. And now they're seeing the rise. I bought my first house at $260,000. And then I bought my second house at $619,000. So there's the difference. 2016 to 2022, look how much equity was gained in the first property and now the second property. And we're just, I went to Edon and they said that we're going to just grow. We're like the fastest growing city, 80 percentile in all of United States. So it's huge. It's huge. We're becoming a major tech company and we have no state taxes. So I moved here from San Diego and I gave myself a raise when I moved here. So no state California taxes. But you're building constant equity, even if it's a condo, a townhouse, you're not paying essentially somebody else's mortgage. You're actually putting value into something that you are paying for.
Yeah. And Edon is economic development of Western Nevada, I've heard.
Yes.
So we do get a lot of people coming from California because of the tax rates. And of course, everyone's just trying to save, to live. But so Jill, could you talk a little bit? So start with saying as a mom, what you would recommend for your child and when to do it. And then also maybe say something about like how they would do it now because it's gone up so much since 2020.
Well, I have two children, and I would say, when they were established with their job situation and their income and they could afford the monthly payment, I would encourage them to do it as soon as they could. If I was able to help them with the down payment, I would. Because I think it's so important to what Angie said, for them to start building equity. Equity is the value of the home minus what you owe in the mortgage. The difference is your equity. And once you get that first home under your belt, which I tell most of my first-time home buyers, the first home is going to be the hardest to get, because you're usually scraping every penny for that down payment. You're scared about that mortgage payment. But once you get that first one under your belt, it's a stepping stone for the next house, because you built that equity. You could sell that house and use that equity now for your down payment on the next house and so on. Or maybe you keep that first house as a rental property or something. And you use your own savings for a down payment on the next house. But once you get that first house, it really opens up a lot of doors for the next one. So I would encourage both of my children, when I felt like they were settled and with good jobs, and could make the payments to do it as soon as they could.
Yeah, that's great. Angela, what do you have to say on that? You've been through it, you said.
Yes. Yep. My oldest daughter, that's what we did. I planted that little seed and I said, you need to be a home buyer, a homeowner. And it took her a couple years. And then she finally said, okay, Mom, I think I'm ready. And we delve in, we got her that starter home. And I tell buyers this, buy what you can afford. If it's a smaller home, if it's a fixer-upper, if it's a condo, get your foot in, gain that equity, and then use that as a stepping stone. And we did that for my daughter. And my other two kids, I'm just getting them ready, making sure, getting their credit going, and making sure they are able to be financially responsible before I put them in that situation. But again, I'm planting the seed.
Yeah. It's not, it isn't the, easiest thing when properties went up in value so fast. And it's also not easy for me looking back at the price I sold it at versus the price they are today. There's that too. I have that, but I have a son and his wife are trying to, they're thinking about getting their first home too. So it's like, I know the pain of that and how challenging that can be. So, okay, another mom question and plus all your experience. So they've been renting, but they don't have skill sets. They don't know how to fix a leaky faucet or a toilet. They have no idea what to do if a roof starts leaking. They've never put their hands in the dirt to do, I don't know, to do, any landscaping. I mean, all that kind of stuff. So Angela, I'm going to go back to you. So what would you tell them would be, first of all, how do they okay, I'm going to ask you this. How do they find people? What do they do? Can they do some stuff on their own? What do they do? What do you think?
They can definitely do some things on their own. I mean, YouTube is out there. You can find a million things on YouTube that help people fix up and do things now. But
conversation. Go ahead and tell.
We're able to help them look for that home. They, we're a resource for them. They can lean on us to say, hey, who do you know that does landscaping? Hey, who do you know that can help me fix my roof? And also, when I'm helping a buyer, I suggest sometimes a home warranty, and a home warranty helps with some minor repairs for that first year. And I think it's totally worth it to get a home warranty for a first-time buyer. And they're already, scraping pennies to get in. That home warranty can be a lifesaver and help them get some repairs done.
Yeah, can you explain a little bit more, like how much that would cost, how they find it, what it covers, that kind of thing?
Yep. So their realtor's going to help them with different. There's about a handful of home warranty companies out there. I like to use ones that have local reps in town. So if we have questions, we can go to them and ask them, hey, what does this cover? Can you help my clients with this? And so I like to use those kinds of home warranties. But basically, they're a 1-year insurance that you can add into your loan fees. And it covers, it can cover roofs, it can cover appliances, it can cover leaks, things like that. So your HVAC system, a lot of them will have rekeys in there, and they cost anywhere from $500 to $700, depending on, there's different tiers of options that they offer.
Per year?
It's for the first year. Most of the time, they'll allow you to renew it if you haven't had too many claims.
I just want to make sure they knew it wasn't per month.
No, yeah, per year. It's a one-time fee.
Yeah, the one-time fee, for sure. Okay, Jill, so your kid is in a house and they're like, the roof is leaking. Mom, what do I do?
Call a roofer. Get a bucket. Let me call Angela and find out who she recommends for a roofer.
Oh, that's so true. That's so true. Like you have any advice for that kind of like transition between you're renting and you just call the office versus you own and now you call, what do I do?
I know for my own self, when I was, I was married before we bought a house. He was very handy, but then I got divorced and I had a house and I used my home warranty a lot. I had a bathtub once that was leaking from the second story down into my kitchen. I had toilet problems, a dishwasher. I mean, I've used my home warranty a gajillion times. So I personally recommend them because I feel like for someone like me who's not handy, it's kind of it's like a savings account almost. It's like a insurance that if something goes wrong, I can call them. So I highly recommend home warranty. Now, I don't know if a roof would be included in a home warranty. Angela might know better.
You can add that.
Oh, okay.
Special as add-on.
Okay.
So I would probably recommend to my kid that they had one and keep it, especially for the first year until you get to know the house and make sure that it's, running okay and everything's running okay. I have one currently on my current house as well. So
yeah, that's great. Angie, back to you. So I'm going to ask a question like, okay, so at least 3 of us here as single women have bought homes. And Angela, I don't know if you've ever done that. Mm-hmm. But yes, so all of it. Okay, single woman, and you're like, I'm going to buy a house. I don't need no man. No, I'm just kidding.
That's right.
I'm a boss. I can't buy this. I need a man to come fix this and move the furniture. And then, life is like, no, life is lifing. So go ahead and put a blanket underneath your furniture and then just pull the blanket and then the furniture will move. And I don't know all the things we do with women, but Angie, okay, so when you're buying a house as a single woman, what were the most important things you looked at? Like what was on the top of your list for what you needed?
What I needed was low maintenance yard. I hate doing yard work. So I went with the already scaped yard, and I did get a home warranty too because I did not know how to fix anything. I did a lot of YouTube, so and I had handymen. Like a lot of my clients are handymen, and so I just made sure I knew who I could use and trust because I was a single woman. So you don't really want like anybody in your house, but I did use my home warranty a lot too. So I just made sure that I had the resources to make sure I was able to repair things.
Yeah. So
luckily I have a lot of people in the industry. I know a plumber, I know electrician. So, and then, I know a lot of realtors that are connectors too, as well. So they connect you with a lot of good people too, resources.
Yeah. Which is another thing, especially if you're moving to a new city, which I've done that so many times now too. So this is another reason why you want a realtor, and they should get paid probably 3 times as much as what they get paid. Sometimes, I don't know. Like, and also be nice to realtors. Okay. And lenders, like they do not get paid until there's a sale. Like, how many months and years they can work with you and might not even be nice to them. And they're doing that for free until they get, the sale is done. And then they just have one chunk of money. And these are tough businesses. Mortgage too. And then, Angie over here running her own business. Listen, right? None of this is easy. Oh, no, I lost my train of thought. I don't know. Okay, Angela, tell us, for the people that have not bought a home yet, what are the most pricey things? And so they put an offer. First of all, let's just do all the terminology. So they're looking for a home and then they make an offer. So we haven't talked about that. Go tell them what happens when you make an offer and what that means.
Okay. So when you find a home, you locate it, you've got the lender, you got the pre-approval letter from the lender, you're ready to rock and roll. We start shopping. You find a house that you like, and your realtor is going to help you put an offer together. It's going to have a lot of different components in it, but that's where your realtor is kind of walking you through the steps, and you put your offer in. If you're the only offer, you're just kind of negotiating terms with the seller and the other agent. And then hopefully you get into contract. That means the seller and the buyer have agreed on terms and you are in contract. The contract goes to the title company. The title company opens an escrow. And then the buyer says, in the terms of the contract, they put in how much they were going to put in their stake. That's their earnest money deposit. The earnest money deposit is part of your down payment. So your realtor helps you put all that into place. And within a couple days of the contract being accepted, that earnest money has to be deposited to keep the contract going. Then you're ordering inspections. The lender's doing their part in getting the appraisal going and making sure all the other documents for the loan are put together. And so a lot of working pieces that go in the background that the buyer doesn't always see, but the lender and the realtor are working hand in hand to get the ball rolling. So you order those inspections and you see what is the integrity of the house. Everything looks good. There might be some minor repairs. And then once those inspections are done, you're asking the seller for some repairs, for some credits for those repairs. Or you say, hey, everything looks good. These are little things I can handle. And you move to the next step. Next step would be appraisal. We're making sure the appraisal comes back. The lender's ordering that and getting that ready for the buyer. And maybe there's some CC&Rs. The seller's ordering the CC&R package so that the buyer has enough days to look at those documents and make sure they agree with all those covenant and restrictions and what the HOA does. So a lot going on. And that's just the first half.
I know. So this is a lot. So I do want to break it down a little bit farther. So, the thing about, I think people do need to know is this whole thing is a legal process. So when you say you go through and you put in an offer, the offer is a legal document.
It is.
If it's accepted, then you're legally bound to the terms. And the earnest money is if you break those deals, you lose the money. So, and they're going to require so much. They might say, well, there's no way we're going to take your offer and turn it into a contract without us knowing if you break it, you're not out something, so that you're not just putting in offers and contracts on 4 or 5 different homes and you just maybe you'll buy something. So this is all a very legal process. So when you put that offer in, if they say yes, now you're bound. And you said, we will give you $3,000 tomorrow to ensure, it's usually right. Isn't that right around there? Have you guys?
We like to see about 1% of the purchase price is what we tell buyers.
Okay, so more than usually nowadays. Okay, so it might be but maybe it could be less. It just depends on whatever they do. So you have to have that money available and ready the next day to put in for a down payment, or not a down payment, but the earnest money.
We call it your skin in the game.
Yeah. So it's just, and I guess that is the money. You certainly do need that up front in order to make sure that, and maybe they don't, if they have no money and it's a zero and there's a zero money down, do they still need earnest money?
Yep.
Yeah.
That's what I was saying before, is they do have to have some money up front for the earnest money and for the appraisal sometimes too.
Okay. So earnest money is the money that you say, I am bound to this. If I change my mind, I lose this money. So it's skin in the game, your earnest money. This is a contract. It's legal. So I think I was asking that there's other, let me go over the legal stuff then. So the appraisal isn't legal. The appraisal is information, right? So you get information and the lender can look at the appraisal too, right? The lender gets the appraisal.
Oh yeah. We order the appraisal. We order it from we have approved appraisers that we use that will accept appraisals from. We rotate who we order them from. The buyer gets a copy because they paid for it. And of course, we have a copy because it's for the loan.
Yeah. So the appraisal, so the mortgage lender is looking to see if there's something that would cause it to not be worth what they think it's worth, and the inspection and the appraisal, both. Right. So the inspection would be, oh, you have termites and the whole house is about to fall down. So, or there's a crack in the foundation, or shoot. Oh, that's one of you guys. Whose battery's low? Who did me? Okay, this is good though. This is good stuff. So, so they might find something that's expensive, that they're like, this has to get, and then they might say, this has to get fixed before we close. Yes?
Correct. And so all of those things, the appraisal, the loan, your inspections, those are all what we call contingencies in the offer. And there's a lot of contingencies built into the offer on top of those things. And it's to safeguard the buyer and the seller too, but mostly the buyer, so that if something comes up, the loan doesn't come in the way they want, or I'm sorry, the appraisal doesn't come in the way we want it to. There's repairs, something comes up with the inspections, and both parties don't agree on who's fixing it, how much, what the actual damage is, then that's where buyer and seller can say, okay, we can't agree here, let's back out, and the buyer's able to walk away without losing their deposit.
Yeah, that's great. We're slightly losing Angela. So listen, if you guys have questions and you're wanting to buy something and you have more questions, we want to get some information, call one of these ladies and they can maybe refer you to someone in a different state if they can't help you, or just, this is good information. You need all of these people to make it happen. So I think to sum up, give like one little piece of advice for someone like why do this? Why go buy a house? Is it going to make you, I'm going to go back to the podcast name. Is it going to make you healthier, happier, wiser, and wealthier?
Yes.
Yes, all the above.
Well, why? Why though? Why does it make you all those things?
Because you're building equity and you're setting up for your future. And you're not throwing your money away. You're actually building equity in a home and able to upgrade houses, families grow and all that stuff. So get out there and buy a house.
Yeah.
If you can. Yeah. We'll get you prepared.
Amen. All right, Jill, Angela, any thoughts on that? Last minute thoughts?
I agree with Angie. I think, you're building wealth. And whether or not you keep that house and use it, as a stepping stone for the next house or whatever, I mean, real estate is an investment that is proven for years that it continues to go up in value. It may not be a straight line up sometimes. It may be, more of a roller coaster sometimes, but
Sure.
It consistently goes up.
Yeah. And then, and you can get so much back when you sell it then.
Yeah.
You put in. Yeah. Angela?
I say get your foot in the door.
Yeah.
Can you hear me?
Yeah.
Get your foot in the door.
This picture's going in and out, so we're going to enjoy that. And you got the sun on your face. You're like, listen, I'm over this. There's sunshine and I'm basking. Well, and I agree. And I think it can make you healthy and happy because you have control over, filtering your water and filtering your air and, what you use for, non-toxic.
And you're not going to get rental increases too. That's a big thing in Reno. A lot of people get those rental increases as soon as their contract is up, and your mortgage is going to stay the same payment as long as like the taxes are still the same in the area. Don't quote me on that. So. And
when it's your house, you can make it your own.
Right?
You can paint the walls lime green if you want to.
Right, right.
It's your space. It's your yard. It's yours to do what you want to do.
Yeah, go be fancy with it for sure. Well, you guys are all very wise women. Thank you so much for being here tonight. And I love you
for having us.
Yeah, you're welcome. And I will see you guys all again very soon. So, all right. Love you. Mwah.
Bye.
Thanks.
Bye.
Bye.